Hi, welcome to the Market Alert for Thursday, the 29th of August 2019. So, yesterday there was no news apart from crude oil, and the market was able to pop up, as they put here. Stocks and bonds pop, cryptos drop, not that much. Silver surges past gold year-to-year date. So we'll have a look at that before we conclude as well. But as it says here, all is well, nothing to see here, just move along. But we know that all is not well in the markets. So let's start off with the Dow, and let's just go and have a look. We'll start off with the daily. It's easy to start off with stepping back and looking at the bigger picture. So yesterday the market managed to reverse off the 200 bar moving average and is just about to close above, well, it's currently trading above the 20 bar moving average. Watch the 76% retracement here. Markets going into a bit of a sideways range. The volatility has dropped, which we'll also see in just a moment as well. So it's a case of waiting for some sort of news to move the market. So let's have a look now, see what news we've got. We've got the preliminary GDP. This is out for the US at 1:30 p.m. Forecast at previous 2.1. Whether the market takes any notice of it or not, at the moment it's only responding to an exchange between China and Trump's tweets. So let's have a look at yesterday's intraday. The market, interestingly enough, in the pre-market session, didn't follow its normal pattern. So what we've got here is a case that they marked it down, then brought it back, whereas they've been marking it up in the pre-market session and then moving it up. So what they did is change the game yesterday. It was inverse to what normally has been happening. You can see all of the buying coming in here, and we have the buy signal. The market gets above the 200 bar moving average. It sits as a support, and then the market continues higher, is what we see there. And then until the end of the session, we had some profit taking coming into the market, and if I just do this, you will see from the high to the low, it takes you to 76% there. Always forget to remove the extend right check mark there. There you go. So it came to 76% and then reversed and moved back to the downside there as it headed into the overnight session. So we can see their prices trading back down towards the 200 bar moving average, which I'll just, there you go, trading that, and we'll just drag across and you can see prices starting to move higher again. But there's no news to move the market, so unless something comes out, then there's nothing to, no selling coming into the market to hold prices back. Meanwhile, in the pound, we were down yesterday, and I probably don't even need to mention why, but just in case you missed all of the news yesterday, the House of Commons, Boris Johnson has been to see the Queen, got Parliament suspended for proroguement, and it's caused all sorts of problems and conspiracy theories. It's been used to manipulate the Brexit deal or no deal and whatever. Like I said before, more interested in the numbers than politics. But it's a perfectly legal constitutional move. It's what's behind it, is the motivation behind it, I think, is the problem that they're all having hissy fits over at the moment. So yeah, the pound down and still in the sideways range, but I did actually have a look at the news yesterday, and you'd think there was a financial apocalypse the way they were going on Sky News. I thought, blimey, the pound doesn't drop that much. It's not according to what I can see. I mean, here's the news. It was the market was long, then it switched to a short, and then the announcement came, and then they brought it back. and you can see, anybody with half a brain can see that this is a 62% retracement here. Won't be quite 76, I don't think. Oh, there you go. There you go, 62.76. There we go, straight at 76%. And then the market's just traded sideways following this. Just activate this again. So overnight, bit of weakness, still below the DP, and of course yesterday evening, or so late afternoon, you see the market going up to the 200 moving average and failing to close above this. So yeah, bit of drama there. I mean, the pound's been dropping for an awful long time, even before June 16, when the Brexit nonsense started. So yeah, and Bitcoin, yeah, the headline saying that it had fallen out of bed, and then well, looking at the chart, you can't really see that much. We did go below the 76% retracement. The 94.76 retest of the low is in place. We are below 10,000, and in the 4 hour we can see here as well that this area is going to be crucial, which is 9476, and you can see the volume there that supported the market. We've got some selling here. Will it be tested? So for example, we get another situation where the market comes through and then reverses on high volume down here, like we had in this area here. So keep an eye out for this. And then as we look at the shorter time frames, we started off well yesterday actually, the market moving higher. There was some selling pressure as we hit the 50 bar moving average, already long from this one, so you can ignore the black trade there, the losing trade, because that one there was already a trade in progress. And then we had the selling pressure coming into the market with the upthrust right on the 200 bar moving average, which you can see here. So then the market traded sideways. Another look to the upside, which we see here, and the market gets through the 200 bar moving average but fails to hold. It then comes back through, and we've got a classic situation here as well, haven't we, where we've got the high down to the low, and I'll just extend this across 76%, and then the market trades to the 200 bar moving average and then just sells off in yesterday evening at 7 p.m. You see the prices move lower there. So since this, the market has been in a sideways range, which we can clearly see there. Well, certainly livened things up a bit yesterday, so I'll be keeping an eye on this one for today. Meanwhile, the implied volatility, if we start off with this one, we can see that we dropped dramatically yesterday to 1697 from 1887, and the market just getting close to that the 20 bar moving average, and closing below on this side, which if you look at this chart you will see a lot more clearly, and it's now amber because we're below here, and if we close above the 20 bar moving average on the upside, we'll switch to green, which will effectively say that the down move for the time being, unless other bad news comes out of the way or they allow the market to actually correct, we'll see it moving back to the upside. And there's the 10 bar there, which is already closed above for the last for yesterday, and just back below there as well. And the 3-month 10-year yield, well, this is an interesting picture. They're getting further and further apart, minus 52 for yesterday, and we're getting this steepness now in the curve. Just come back here and you can see now we're getting these big blocks of red that we've had before. You can see there that we still haven't got down to the 2000 lows for the 10-year 3-month. I'm just looking and thinking there. I'll find out what this one is tomorrow, or can I do it there? Yeah, minus 0.5. There you go. You can actually do it there. Minus 0.95, nearly a full whole point there. So we've got a bit to go at 0.52, but that's the all-time low. I'll mark these up so we can keep an eye on these. And then finally, what else have we got? Just Deutsche Bank stuck in the sideways range at the moment. They're managing to hold this up as well. So not a lot to report there. Okay, that's long enough. It's just over 10 minutes long. That will do it for this one. And as ever, thanks for watching. See you in the next one.